Hello, hello. Okay, cool. All right, we are good here. Could you? Okay, so first I want to cover this real quick. So kind of like the process. Hold on. This week. So this is like we're gonna go over this a little bit, like how to backtest, or like just kind of like the process I take personally when stepping into a day. So obviously the first thing is ideally on the daily chart, the only thing I care about on the daily chart literally is just highs and lows and gaps, right? So the first thing I look at is, are we near a gap, or are we near a high or low to actually draw into on the daily chart? That's the first step. Or if we've already, if we already traded into the high or low, then I'm looking to see if we have a reversal signature. So this is where I'm looking for SMTs, for example. Like look at this high right here. What do we form? A two-stage SMT at this high. This is on GBP. Doesn't matter what asset you trade. So this is on GBP here. I'm looking for some form of reversal signature, right? If you watch my video on SMTs, this is when I confirm reversals and stuff like that with SMTs. And there's obviously certain sequences, right? But this is one of them. It's just a swing formation, but it's a two-stage SMT shown via swing point. So it's like a Kraken correlation via candle 1, candle 2. That's your first Kraken correlation. You have a strength switch SMT, which is what I teach. It's a two-stage Kraken correlation. And it's between candle 2 and candle 3 like this. And you could trade this candle lower and obviously this one. You have failure swings below. So that's the first step on the daily chart. It's just identifying like what could we could trade towards, what could we trade away from, right? And whenever you have a draw on liquidity, for example, I want to be trading away from some sort of relevant low, right? That creates a protected swing to get towards this draw on liquidity. And guess what I do right here? I do the same shit. I'm looking for SMT, some form of two-stage Kraken correlation. I'm looking for the daily profile to support this idea to get to a draw on liquidity, or I look for a profile to support a move away from a higher low, right, on the daily chart. So we can kind of look at this day in particular. Like, does this day right here support this SMT? Let's pull up this chart here. Let's just exit out of this actually. So you guys have seen my last stream last week. I told you guys about how price will break an SMT and we can get a reversal signature rate. So that's what you're seeing here. At one point, if I play price here, this was an SMT at one point, right? Look right here, right? But when this asset fails to do what? If it fails to manipulate, what does that typically mean? That this asset will catch up, right, and break that SMT. So it's like, how would you know that we're going to fail to reverse over here? Well, it's just like daily profiles, it's signatures and price, right? If I draw out this over here, clearly this is a continuation signature through the high. AM talks about this a lot, where we trade into a high, a relevant high or low. We get opposing candles away from it, but if we close back through them, that is your continuation signature. And then you can trade, obviously you would anticipate this to be a fail to manipulate, which would have this asset catch up, right? So when it does catch up, when this asset does catch up, this is where we, a potential reversal signature, right? And this is what we get, essentially. You get a two-stage SMT, right, here, and then what can you expect the next day to do is reverse, right? And this manipulation here happened on a Monday. So there's a lot of things, right? Profiling, right? Look at the weekly, opens high first, creates divergence to trade it from this high. What can we expect the rest of the week do? To draw towards these lows, right? And then if I pull up this chart over here, then I'm looking, once we trade into this low down here, we're creating a divergence, right? Look at this divergence. One asset is sweeping out a low, the other asset is in a gap. This is a really good thing to see. But you still have to have some sort of SMT, so we don't really have that. We don't have a two-stage Kraken correlation. This is why it's very important to have this. What you do have is something that I've taught you guys. Again, look at it's just like everywhere, dude. This profile here supports a bearish day, right? So I could still trade this. A lot of people would only limit themselves to a bullish day, but I trade what I see. So you see the days opening high first. We also like barely tag this low. Like look at this. We've barely tagged that low. So another thing I'm looking at is the candle profile. This is one of the easiest filters in price. I have a YouTube video on this. It's in my course. It's in the course too. It's the candle profiling, how it opens. If the candle opens high first, generally I'm going to be what? I'm going to be more bearish biased, right? Because when it opens high like this, and you get this sequence, look what happens. At one point, this was an SMT, right? This was an SMT at one point. When it breaks, though, what do we have here? This is verbatim how I have it. I haven't taught you guys this, but this is what you saw in NQ basically this week. Is at one point this was an SMT, right here. This was an SMT, right? Sorry, let me draw it. This is an SMT, but when it breaks that SMT, it creates a two-stage SMT, which is in the form of strength switching, because this asset over here is stronger because not only stronger on the higher time frame, because obviously it's creating the higher high here, but it's stronger because it traded into the high first. But now when this asset catches up to break the SMT, we already know that's a trigger for reversal. When you see a strength switch like this, you see how it's a divergence here, right? It's not taking out this candle's high right here. That is a strength switch, and that is one of the sequences to actually know that we will reverse when this asset catches up to this high, right? So I would definitely trade this lower. Now this may be CPI or yeah, this is FOMC, so probably not like I would trade that anyways, but you typically want to avoid these days regardless. Yeah, pretty shit PA here as you see. So I wouldn't trade that probably. But as you see, it's not really a bullish profile, right? Because the day just straight up opens higher. We don't really have an established low to trade away from. So I wouldn't be bullish this day, right? I would kind of roll that bias over. Please play price one more candle forward. You know, if this is not going to be a low that's put in, because if I look in here, do we have like a CSD within here? No, right? But you do have a candle closure, but this is where people, they just pattern trade candle closes and think that we're going to reverse off of this candle's wick, but we didn't even do anything. It didn't have a CSD, so either we do two things. It's like the next day has to stay within this range and then create the CSD, or we just reverse off the previous candle's low and have some bullish profile. All right, so this is the first I'm looking at. This is the only relevant level we have. I mean, you only have this low to reverse from, right? We're already within this gap, right? So you must reverse off this previous day's low, but you need a profile to support it. So if I go to the hourly chart, let's see if there's a profile. Ideally, I want the candle to do what? Open low first, right? So it does that exactly. This is the first thing I'm looking at. If I'm bullish, I want to see the day open low first, right? And as you see, it does that. We Asia low hits the previous low, doesn't put in a reversal, and then we sweep out Asia lows right at 2 o'clock. So London reversal here. Another thing we see though later on in New York session is a type of divergence called body SMT. So you're seeing strength switching here because this asset is, remember, it's the weaker one because it's creating this divergence here. But now we're putting in a hidden SMT. Or really, you're putting it, it's right here. You can just see it right here. So here is a two-stage SMT. Right here. Which would just confirm the market's going into the next relevant high, which is like this high, for example. Does that make sense? And then once you reach this relevant high, you're doing the same thing. The same process starts over. You know, you're seeing if this day supports, what does it support? A bullish day, bearish day? That's what you're looking for. It's just highs and lows. It's the same process on all time frames. So I'm just looking at highs and lows, fair value gaps. Does that profile support a move away from it? And I'm just confirming with like two-stage SMTs generally. It's literally the same process on all assets. It doesn't matter what asset I'm trading. I'm going to do the same thing. That's typically how I do it though. And obviously I have drivers with indices that's specific. So I'll show you the same thing. If we move over here, something that I took this week. Let me pull up YM because that's what it was with. YM over here. This is extremely clean. This is on FOMC, the AM session. So let's pull price here. All right, so if I go to the daily chart here, a bit weird, right? Because a lot of times you're not gonna have some clean daily framework. Like this is not clean whatsoever. Like, if I look at the daily, but what I can see, if it's like if I'm gonna be a bullish day, then you have to reverse from here. You know, if I'm gonna be bullish, I don't want price to come down here this day because that would create way too large of a wick. So what's close to the daily open? That's what you're looking at. Like what's close to the daily open to reverse from or continue from. Simple as that. So here we trade into the daily low, the previous day's low. Early on in the day, as you see, we open low into it, straight off rip, and we expand away. So when you have an Asia reversal like this, and when you're looking for like a New York continuation, this is really for any candle though, like weekly as well. I use this a lot for the weekly, but if we like put in a low like early on in the candle or whatnot, and you want to try to continuation away from that, there's only two things you continue from. It's either fair value gap within the range from retracement high to current day's low. You only can continue from that, or you only can continue from some relevant low put in, right? So if I want to continue, we have to manipulate this low. Like you have to do it. If you don't manipulate this low, we're going to go probably next relevant low, right? Or if there's a gap here, ideally I want to see that gap hold, right? So if you look here, we form a divergence with YM, but we don't get a reversal signature. Why? Because we just inside bar. This is not a reversal signature. Right? Reversal signature is this candle 2 being put in, and then we expand away, expansion candles away. Inside bar is the consolidation signature, if you've seen my video on that. So ideally we just take out this low. So what you're going to see is that what I just showed you earlier, where in Q breaks an SMT, while YM holds this low. So we know that YM was weaker because it trades this low at first, but now it's creating a divergence here, right? So it's a two-stage SMT. And obviously this is a relevant low as well. And this is happening at 9:30. So see how it's pretty like simple, right? I'm just using drivers SMT to confirm a move from point A to point B. If you look at the driver here, 9:30 opens low into this low. This is extremely high probability. Like I don't care about the daily, can be doing whatever. Like I see this, I don't need the daily chart to be super clear for me to trade 1 hourly expansion candle, 2 hourly expansion candles. I don't need that. I just need hourly and 4 hour, highs and lows and whatnot confirmed by SMTs and the profile in general, the daily profile. And that's all I really care about, right? So that's my type of trading. But it's this. You see, it's the same process even on the daily chart. It's the same thing, but you're not always gonna have the daily framework and stuff like that, right? So yeah. Could you go over like what or when, what you do in the beginning of each trading day, more like the order of how you look at things? Yeah, I'm like, oh yeah, it's kind of the repeating thing. Yeah, I just look at the first thing I hop on the chart is like, how is the candle forming? Like, how are we opening low first? Are we opening high first? That's what I'm looking at first. And I'm looking for key levels that were around the open. So what you always want to do is mark out relevant levels around the daily open, because those are what you're going to reverse from or continue from, right? Because they need to be by the daily open to form a small wick. So I'm just looking at, do we trade into anything relevant? If we did trade into something relevant, does the candle profile support, price trading away from it? If we didn't reverse from anything, well then it's pretty, there's always going to be something to reverse from for a New York reversal. For example, like let's say the previous day expanded, Asia session retraces, we just do nothing in Asia and London session, there's always going to be something to reverse from. That's going to be the form of a relevant low that's put in overnight, usually like high Asia highs and lows or something like this you would reverse from, right? If you fail to manipulate this, then that would be your invalidation for a reversal profile. Does that kind of make sense? If we like manipulate the high first, right, maybe two-stage SMT here, then this can be my trade to go here. So it's like whatever side we manipulate first is what I would be trading. My process is pretty simple, guys. It's just the filtering and price. The way I filter price is a bit advanced, and I require a lot and have a lot of knowledge in that. But as far as the the process, it's very simple actually. Will you review Friday's PA or Friday New York Open PA on indices? Yeah, I can. So this is a pretty good day for longs, like very, very good. And AM took this. This is when you just consolidates. So if I pull up like, I think YM is like a really good example of it. Here's the Monday. Here's the daily open. Who's familiar with the delayed protraction profile? I learned it from my fees, but this is a kind of the same thing in essentially. A protraction profile is like the daily when you're bullish. Ideally, you want it to open low. This is when we kind of open high first, and then we come back lower all the way back down to the daily open. And whatever swing point was created here, we actually reverse from, right? So here's where you want to see like a SMT or something, and then we reverse higher like this. So this is the same thing, but it's consolidation. So the candle opens high first, and then we just consolidate between Monday's range low and range high. So when you manipulate this, all you're doing is creating a new weekly wick, essentially, right? So this is viewed as the weekly manipulation to trade higher. And you see this candle here. This is not the Friday's candle. This is Thursday's and Friday's candle here. So I think this is Thursday's open. Yeah, this is Thursday's open, but really the Friday open is right here. So yeah, I actually have an expansion day here. So when I come to New York, I see that we have expanded quite largely, right? So we've expanded quite a lot here. Very large range overnight, which is not ideal for New York continuations necessarily. But I also didn't want to sell it really. I know we have a two-stage SMT here, right? We have here's your daily open, very large extended range. But I didn't want to sell this necessarily because like, yeah, we created an SMT here. But we have a bunch of failure swings. It's a bit awkward day, honestly, because like it's also not the best long day because we've already expanded so much. And you guys know I don't like SMTs like this, typically. But when you have a two-stage SMT, strength switch, you can get that retracement or reversal. So that's what we had here at 9:30. So it's actually like really clean, honestly. For retracement, like I don't think I would anticipate price going down here. I could anticipate this, like EQ of this range at least to maybe continue from, but you can definitely trade this as like a retracement. So here's your two-stage SMT right there, and then 9:30 is expanding away from that rate. So it's not horrible, but yeah, it's not bad. But you're gonna see what caps off the daily range or the weekly range, or kind of like this retracement in general. Like if we're not gonna come down to the previous day's or the current day's low, which it doesn't really make too much sense to trade past this low because look at the opposing run size. It's absolutely huge, right? So again, what can cap off a daily range? Or sorry, a retracement. So here's the current day's low, here's the current day's high. If we want to stay in between this range, where could we get a reaction from? It's these lows. Like I want to see an SMT here or some sort of reversal here. So you're seeing that we had some sort of reaction here, but we failed to kind of manipulate it. Where ES over here just consolidates. So I actually took this, by the way. I took this. This is my scalp, by the way. It's just back in the range because I know that we're not going to come down here. So I'm like, I know that when we engage at this level, we are not going to displace through it because one asset is taking out this low where like, again, it's like a broken SMT basically because this was SMT at one point and then ES breaks this SMT where the other asset is putting a divergence here. This is a very good sequence to have some sort of, I know that price is not likely to do this. I say in my execution video that's not going to go up here probably. What we could do, I could definitely expect this though at least. EQ of like this range around here. So if you look at my this scalp video that I traded, right? I'm just in this trade down here. So the reason why it's positioned up here, my first entry is down here, right? It's actually right here as soon as we create this propulsion block. And then I scale in when we close above these candles. So I actually entered twice here. And I was looking to TP here at this EQ, but I'm scalping, so I'm trading very aggressively. So at this point where I entered here, so my first risk was around, I can't even remember what the first risk was, but basically I'm trading on like 50K accounts, copy trading. But if you do the math here, when I pull, basically I'm pulling my stop loss or my entry that's in profit. I'm putting the stop loss in profit here and entering another position here and putting the stop loss there. So really I'm risking total. I was risking 125 to make $1,600, right? So that it's a really good thing when you scale into positions and your first entry is like in profit, and you put that stop loss in profit, because that can kind of eat up a loss, where like you can kind of like scale in, and it's kind of like almost like damn near risk free. Like I'm really doubling my risk with very little actually risking, and the potential to make is like a lot more than what I'm risking, right? $125 to make 1,600. It's very nice. But as you see, price, I knew that it's gonna have trouble, getting through here. Where am I at here? I knew it's gonna have trouble on ES once we start to hit this area, especially YM hit this area first, this like EQ on this range, because again, it's not gonna do this in one day, bro. It's not gonna do this and then manipulate and then expand again. It's not going to do that, especially around like 11 o'clock ish. It doesn't have enough juice for that. So what I can anticipate, like I said, is a move like back in this range, which is what I took. So I managed very aggressively, right? Because at this point I'm up a lot on a 50K count. I mean, $1,600 or whatever I'm floating up. That's pretty decent on a Friday. So it was like around $1,000 here or whatever on on my accounts or whatever. But that was my scalp that I took. Not really worth posting because it's a scalp. But yeah, it's a little bit kind of like advanced scalping, I guess you could say. And we actually broke this overall SMT, and you're seeing what happens when you break this overall SMT. So you're seeing double reactions here basically. And you're seeing a strength switch right here, but I'm not going to really go over that. I didn't trade this because it's PM session, but like I said, when price engaged with this level and breaks that SMT, we're still holding this one. So I just know that it's likely going to cap off the retracement like around this area, So that was my trade. I did not trade this here. I just traded a small move, Typically, like with experience, you can, I'm not going to say every day you can get a trade, but it's pretty mainly every fucking day, like honestly. And a lot of people would think that's low probability, but it's not. With when I'm using with the SMTs and stuff, it's not really low probability. It's a small move, so I just required like smaller time frame. I barely ever do like 1 minute stuff, but when you're trading prop firms, you just hit trading days a lot of times. That's what I was really doing. What are we at here? So what do you consider low probability setups conditions, or how would you find? Yeah, low probability, like I said, there's kind of things you can already anticipate it being low probability. It's obviously like in a daily consolidation like this, or like maybe after 3 days of expansion, right? And then you can anticipate the rest of the days to be pretty shit. The other ones are just trading into a relevant high, like maybe the daily chart trading to a relevant high. Typically, if it's not going to be a reversal signature, if you don't get a reverse signature, it's going to be very lackluster, because if you don't reverse, there's only two things that can happen. You get either consolidation or retracement. Those two things are very low probability to actually trade. Another one is like if the previous sessions expanded and hit relevant objectives, New York is going to be ass. If these happen, by the way, if the previous session expand, there's only one thing I would want to trade, and that would be a reversal like back in the range. I wouldn't want to trade a continuation typically, especially if objectives are open or already taken. Another thing is just like the lack of your reversal signature to put in like the low of day, high of day when we actually trading something relevant. If you don't get a reverse signature or like a lack of SMT or something, typically low probability. Stuff like that, I would say. There's some more like nuanced stuff, like more like situational based shit, but that's like the framework of it really. Another one would be like if I'm going to be a bullish day and the profile doesn't support this idea, if it opens high first, typically I don't want to trade that day. Yeah, like stuff like that. Candle profiling, phase of price, stuff like that. And when drivers do not, another thing is like when drivers do not, if we put in like valid framework prior to a driver and we don't expand away, that's also low probability as well. Like the driver does not reverse or expand away from what you already put in reversal. If you're only trade 10 a.m. for a candle, how would you go about framing a trade idea and how? Yeah, so it's first thing you have to understand with 4-hour profiling, etc., is like the framework comes first. Like you must know how to frame like a high day, low of day, and then it's just easy. You're just trading the 10 a.m. expansion candle away from that. The only things to look out for trading 10 a.m. is you do not want an expansion, prior to your entry. That's never the case for anything. You want to catch the expansion. You don't want to be chasing the expansion like way high in a range or trading after an objective gets taken. So you need an objective to be open. You ideally, obviously, want that 6 a.m. candle to put in the reversal. So 6 a.m. Manipulation, 10 a.m. continuation. That's the best 10 a.m. profile right there. Obviously, London reversal or Asia reversal, like you can trade it, but there has to be a draw on liquidity open or something like this. It's like, or something like this. Like I said, like if it's Asia or London low of day, and we've already expanded, like I said, there has to be a draw on liquidity, and ideally, it's either like the 6 a.m. candle hit something relevant within the daily expansion range or the daily range, so we can continue from, or 10 a.m. like opens low into something relevant, right? Or maybe it looks something like this where 6 a.m. manipulates an internal low, which is like really like a relevant low within the daily range, and then 10 a.m. expands. There's a couple different ways, but you always need to be trading something away from something relevant with the draw liquidity open. If you see the days have expanded prior to 10 a.m., typically low probability. If I look at some of these days here, I think 6 a.m. were the best. So 6 a.m. is the best when typically in continuation. So here's 6 a.m. continuation, 6 a.m. continuation. This is what I traded this day. I traded to get to this high. Once we took out relevant highs, I just didn't trade, after that. And it did offer an expansion. That's because we formed an SMT down here. But typically the first relevant high and low that you trade into is going to be your best in most like low resistance runs. So what I mean by that, look at the space between these highs. The best opportunity will be getting in before we even take out this high, right? So if you look here, it's a bit weird because of contracts right now, but let's go to NQ over here. So when you put in this reversal, I'm trading the 6 a.m. candle. So 6 a.m. candle is best for continuation. And if you want to trade like a reversal profile, like New York reversal, ideally 6 a.m. puts in the reversal. If it has a small wick, obviously you can trade it, but 10 a.m. is just going to be the easiest. And you do not want 6 a.m., for example. You don't want it to reverse, ideally. That's not what you want to see. You want 6 a.m. to manipulate, but not really expand. So this is a great example. This is something I traded. I want 6 a.m. to manipulate, for example, and then I don't want it to expand away, so I want 10 a.m. to be the expansion. This is what I traded, just from here to here, right? I think I went over this example last week. This is another example that I took the previous day. You manipulate this low. See how 6 a.m. manipulates? There's also an SMT here, so let's just talk about phases of price. Like, why would he even anticipate bullish here? Because it's a bit weird of a profile, right? Because this day opens low and then high and then low again. But with the right context, you can still trade long because look at this relevant high over here, right? This can be viewed as a manipulation potentially, but if you do not displace past the most local low that basically created this manipulation, then that would just be like seek and destroy, which I've already showed you guys that this is a sign of continuation, right? So you can even see it over here. This can be a manipulation, but if you can't really displace past this high, you see how we're not creating like a fair value gap on like the hourly chart. There's no real displacement here. We have that really deep pullback back in the range. That's just seek and destroy, which means we're going to create another low, right? So that's what you see here. It's just seek and destroy, which means we're going to create another high, especially when you create this at 9:30. So if this manipulation created at 9:30 and you have an SMT here, yeah, it's just literally a continuation, right? Signature. So there's like more nuanced stuff like that where it's like I don't really care how the profile forms because I'm not really anticipating a big move here regardless. This is something I traded, but I only take it to this high right here. It goes a lot beyond that, but I don't care to anticipate that given the profile because it doesn't really it has a small wick, as you see probably. Yeah, it has a very small wick, but the way the candle forms is a little fucky, you know. It really doesn't go much past the high, honestly. Like, there's nothing else to target over here, so I know it's not going to get up here, so that's when you can maybe use a projection or something. But yeah, I mean, over here as well, like the profile, again, this is that delayed protraction profile, by the way, where it opens low, and then it comes back up here, and then manipulates, creating the current day high. So with this context, though, it's extremely high probable, regardless of how the profile forms, because again, I'm just trading a very small move. Like, I don't give a shit how the daily looks. Like, you don't actually, okay, it's obviously ideal, like the daily is really clean and whatnot, but bro, like, I'm trading these little ranges. That's what people don't understand. Look at these little ranges. I don't really care how the daily chart looks necessarily, right? If I have confirmations here like SMT and the driver, literally both days here, I can get this small move, right? Like, it doesn't really matter. So if you look here, remember what I taught you guys about SMT's breaking? So if you go here, look at ES. We close above this high, clearly do not manipulate it. NQ is even stronger. See that? But when YM breaks this SMT, this is when we could potentially reverse. This is where there's a couple different sequences that I haven't taught you guys, but here's one of them. It's obviously strength switching, right? So you can just see it with the candle close. This candle should be bearish because it's weaker, but it's bullish. Where these ones are bearish when they should be bullish because they're obviously stronger, right? So that's a form of strength switching, which is created at 9:30. So what should 10 o'clock do? It should expand into this low. And I don't care to anticipate anything after that because this is a relevant low in the market. What can we do when we hit relevant lows? This is where a lot of people go wrong. They're going to look to trade on the 5-minute. Like, as soon as we hit this low to go all the way down here. No. That's a very, in my opinion, it's very dangerous to do. That you need context. That you need daily context. You need the context that we have like some higher time from reversal, and you have like a higher time from drawn liquidity, because then you can expect price to displace through lows, because that's what price does in a continuation. We displace through lows. But in this case, like, you don't know that because the daily there's no context, and we just manipulated this high. And what did I just tell you over here? If you manipulate a high, for example, and you don't displace through the low, what could that be? Just seek and destroy, right? So you never know that. So this is the safest bet. That's why I always trade. I'm just trading these small moves, right? And you see what price does. It kind of just bullshits around this area, going NQ and ES. Very choppy, right? It's going to be choppy because there's nothing in close proximity to this low. So you need to be TPing at these areas, or at least taking a runner off or etc. at these areas, because price can just fuck around these areas, or just simply just reverse, right? It's like the same thing over here. It's like when we take out this relevant high, you need to be waiting for a new like model, for example. Like, you need to be waiting for two things. You don't need to go on the 5-minute and just look for continuation, because again, there's nothing beyond these highs, right? So you need to be waiting for a new model where like we retrace into this gap. Boom, now you have a new model to go from internal to external. You do the same shit. You want to get in before we take out this high, right? Or you wait for, if this fails, this is a relevant low in the market. So you have to manipulate it if we're going to continue. So it's just a bunch of like if-then scenarios with like framework and stuff like that. But yeah, I'm just yapping, honestly. When we have a C2 on any time frame, we prefer it to have a CSD, especially higher time frame? So within higher time frame profiling, I don't require any. This is me. I'm a little different, maybe. I don't actually require like a CSD, to be honest. Like on the hourly or 30-minute, for example, if I'm gonna trade like a reversal day with a large wick or something, or even any reversal day, I don't require like a CSD on the hourly. Like, I'll just trade the wick. Like, for example, like I traded this reversal day. Okay, where were we just at? Just so I can, yeah, I traded this reversal day on NQ. So it's like, if I go to the daily chart, this is a reversal day, right? But if I wait for a what do you call it, CSD, I'm gonna miss the whole move. I want to trade this manipulation to this high, because again, this high right here there's nothing else beyond it. So look what happens when we hit this high. We get, retracement signatures, right? I'm telling you, this is one of the best. This is another filter for price for you guys. You want to be entering before we even take out the most relevant swing, really. Uh, I'm telling you, it's probably going to hire you. It hired my winner a lot. But if you look here, we trade it into a relevant low on the daily time frame. There's nothing else beyond it. So we consolidates. So Asia, London consolidation. I'm not viewing this as an open high or an open low because it's a consolidation. So the first manipulation is what I'm viewing as the open low, really. So if you look at all the time frame, all the assets, they all consolidate. So again, that sequence that I told you guys about assets manipulating, you look at YM. We traded into this low a long time ago. We did not manipulate this low, as you see. ES, it's like the middleman. We closed below the low at 7 o'clock, but in Q, right, there's obviously a divergence here, but when it breaks this SMT, this is when you could get a potential reversal. But you need some context, right? So the context here is the driver. So this is verbatim in my YouTube video. Like all the stuff I teach, it really repeats, I'm telling you. So here we manipulate prior to the driver, right? And we already can assume that potentially, the lagging asset, when it manipulates, we could potentially reverse. This is a retrace, right? Could be a potential, right, AMD reversal. Right? It's like expansion to low, consolidation, manipulation, expansion. But prior to the driver, did we reverse yet? No, we didn't, right? But we did hit a relevant level. So if we're going to reverse here, the driver needs to expand away. It needs to do that, right? So boom, you get expansion away. So now you have the reversal signature of expansion, mouth expansion, right? But I'm not going to trade this necessarily. So if I wait for a CSD, like I'm missing everything here. Maybe a 15-minute, I don't know. Technically you have a 15-minute CSD, but I don't care about that. I care about the signature and price. Like this is a reversal signature, right? It's the kind of like the asset synchronization thing that I've taught you guys, but also the driver. That confirms the reversal for me already, really, to be honest. We can get to this high. It's like a 15-minute high or 5-minute, whatever. It's like a gap on like a higher time frame, I think. Like whatever, like this gap, for example, I think I targeted this. I'm not really sure. I don't remember. But I definitely was looking for this high as well. So same thing. If you put in a reversal prior to the driver, which is 9:30, then what I want to see, right? I want to see the driver expand away from this low and continue higher. So it's important that if you're going to trade a driver, that there's a draw liquidity still open, ideally, right? So there's a draw liquidity still open. So here I'm trading a candle 2. So your question, it's on all time frames. So here's a candle 2. There's no SMT here, but it has to be within a key level, right? We need to do something to even anticipate a reversal, right? So on the daily context, we trade it into this daily low. We got a consolidation signature, right? So that's your context to potentially have a reversal day because we traded into this daily low. Now to trade this C2, your context is it's also in a gap, right? It's in continuation, and the driver is expanding away from this fair value gap or this low of the day, right? So what you need is I do need a CST on the lower time frame. However, if I'm going to trade like a 30-minute or hourly C2, I do need a CSD, right? So if you look here, a little bit choppy. Here's your first CSD. This is the opposing candle that created a low. This is your second CSD, right? You're seeing that 9:45 news as well starts to expand away. 9:30 wicks into the low, has that close through. So this is my trade to get into this high, and it's a simple 2-hour, right? But I don't really require a C2 now. If I'm gonna trade a C3 though, to validate this candle 2, basically to trade continuation, that's when I'll typically require like a CSD. But yeah, I'm not using CSDs too often, to be honest, on the intermediate time frame. That's just me personally though. I have more confirmation with like the framework in general, but I'll basically trade the manipulation. So let's say like, I don't know, let's say we have a low, right? The daily opens here and the daily trades into the low. Like I'm more interested in trading this manipulation to the high rather than especially on a reversal day where like maybe you have like a large opposing run, like than trading this CSD, for example, like higher. Because I think honestly this is the better move. Obviously in continuation it's gonna be more higher probable, but yeah, you don't really need to wait for that in my case, right? Now if it's a higher time frame like model or something, yeah, like this would confirm the reversal, but I don't need a CSD on the higher time frame to confirm this move to here, But maybe from this move to like here, Yeah, you need that higher time from CST, if that makes sense. But I'm more of like a small ranged trader. Obviously, you guys see me trade like daily ranges and stuff, but I'm not waiting always for like the cleanest daily framework. That's why you guys see me trade a lot more frequently. But I require a lot more intraday framework and lower time frame confirmation, whereas maybe T-trades and AM do not require that. But I have to require that if I'm not going to wait for the daily. And first time in your live, this is good stuff. How can I deep dive into daily profiles? So SMTs, I have a stream on, or my YouTube video. Also, daily profiles as well. Look up April 5th stream, April 26th stream. I go over a little bit about that, profiling in general, and validations, and SMTs. You should watch my YouTube video. It's the same thing, really. Where I took YM and got stopped out yesterday. Yeah, I didn't like this cells. Like, yeah, there's a two-stage SMT that you're seeing here. In my opinion, it's just like not that high probable. So if you look at this asset, you're seeing the strength switch here on NQ. And YM would be like right here, for example. But I'm assuming you took it in this candle, right? Like you took this, I think y'all took this CSD, right? Or some shit. A lot of people. It's like a really small ranged CSD, which is like fine, but you probably took this or some shit. I'm gonna guess. You can go over this trade, please, and give extra feedback. What asset is this? So this is not an SMT that I would deem relevant. Why? Because we created the SMT here with this low. You see it had no respect for it. You see that? It had absolutely no respect for it. So typically I would not view this as an SMT. But I need to see like what asset this is so I can actually go look. This is gold or some shit? Looks like gold this week. It looks like really ass. High day was formed 2100. Important here to get. So did you sell it? I'm a little confused. Oh, you had a strength switch down here or something. So where's the daily open here? Daily open is like somewhere around here. So it opens high and then low. What is this? Is this Asia? Oh, hell no. It might be your first issue there. Asia session. I mean, a lot of people trade Asia in with gold, but I do not. So I'm gonna try to find what you're talking about here. It looked like something in here though. That's what it looked like. What time frame is this? 4 hour? Maybe this is like silver. No, I have no idea, dude. I'm not gonna lie, I cannot find it. It doesn't say like what asset this is. Unless I'm just blind. Oh, okay, it's gold. Okay, I see. I'm trying to find it though. This is futures though, so it might look a little bit different. Yeah, I think I'm blind, bro. I can't find it, man. Maybe it's a little bit down here. Okay, I see it. It's somewhere around here. Alright, so you traded something in here. Yeah, okay, gotcha. Let's see. These markets are extremely decoupled, like extremely. What we did have though is previous week high SMT. So I've told you guys this a couple times. So this is when I typically do not like trading correlated markets, is like when they do not create, they're not creating the same highs and lows, right? So if you look at this high right here, dude, this high got created over here. Like it's absolutely cooked. You know, they're not synchronized, right? So SMT means very little. So typically, what actually one way markets will like resync is a manipulation, right? So like this high being manipulated will typically catch up to like whatever gold is doing. You know what I'm saying? So that's what you see here. It's like this asset manipulates and then it catches up to this asset. But if you look, even if I pull up silver and maybe like euro, for example. So these assets were extremely decoupled, which means they're just not correlated. So as you see, like if I play price, I guess like right here, pretty much. Look at this asset, it's trading lower while this one is trading higher, right? So they're very out of sync, right? So typically, like when one asset manipulates, this is when price can start to catch up to each other. This one will start to retrace while this one starts to expand, right? So that kind of makes sense. But again, this is like another stream. It's very detailed and stuff like that. But I wouldn't even consider any. If you were marking SMTs with silver, you have to be very careful. But even like, I don't even like this signature, honestly. Like I said, this SMT got created a long time ago. So I don't give a shit. I really don't give a shit about this SMT, honestly. If that makes sense. Because like what you're trying to trade here, even like you see even this low, it didn't get manipulated, really. It got traded way past. That's not manipulation, you know? If that makes sense. So really, it's almost like, it's just really choppy. It's almost like a consolidation, but it's like just flowing in one direction. Like it's just flowing downward. Every time we take it a low, we have this deep, kind of like deep retracement, but every time we like reach back into the range, like EQ, see how every time we reach back into EQ of like a range, like we just fall back lower. But I wouldn't even trade anything lower because we're just trading off feather swing. So I didn't even trade gold. Like I don't even know if I traded gold once last week because it just looked so ass and out of sync that, you know, I could just trade another market. But yeah, I would just say like I wouldn't really be viewing this as a reversal down here. Oh, it does. Yeah, I have to start early, kinda. Not from now on, but sometimes I have to start early because I have to do stuff later in the day or something. Sort of, kind of like hedging. Yeah, it's not really hedging. So it's like what I mean by that. My Friday trade was so basically it enter like right here, for example. This is my first position, right? Let's say. I'm targeting a high up here, some shit. This is my first position, right? I do this when I'm scalping though, because if I'm scalping on the lower time frame, typically I manage aggressively because I have these I'm like smaller ranged trading, so I can use it on the lower time frame. And when I'm scalping, typically I'm always just trying to hit a daily trading day for prop firms, really. So I'm just need these smaller ranged plays where like I can just trail my stop loss and lock in profits no matter what, you know. But I can also scale into positions where like I have like these protected, I guess, entries, and I can capitalize on it, kind of. So what I mean by that is if price does this, for example, and it forms an invalidation above my entry, I'm now going to move my stop loss to basically right here. So I guess, how do I do this math here? Like, my stop loss, let's like make it a different color. Let's do like red for my stop loss, green for my TP, and let's do like blue for my entry or some shit. Alright, so here's my entry, right? And what I will do is I will enter another position here. Right, I will move this entry stop loss will go here. But what I'm doing is I'm moving my first position stop loss in profit. So what that does is if this loses right here, then I'm not actually taking a loss because it's covered, or I'm taking a very small loss because it's covered by the position that's already in profit. So what you're doing is it's kind of like like a win-win honestly because you can't really lose as much, but you can gain like double the amount, if that makes sense. So the risk reward is like really high. So if these both hit, you make double the amount, but if this loses, you either gain a little bit or you lose a little bit, or like you go break even, if that makes sense. That makes sense, kind of. So a lot of people do that to. This is how they grow accounts, or like their trades are like way bigger than their losses because they're scaling in and shit like that. That's how you grow an account. I don't really do that too much, but I do it when I'm scalping because I will just manage like super aggressively. Because when you're scalping, it's already a little bit lower probability, just because you're on the lower time frame. Especially with yesterday's like PA, like that's not high necessarily. It's not like high probable, but even when I scalp, it's under pretty decent condition typically. I don't just like scalp the 1 minute randomly and shit. So you will always wait for a two-stage. Yeah, always. I'm telling you, SMT is the best filter for price. The very best. There's nothing better. Do you have a stream or video that goes over confirming profiling high day or low day? It is usually just going to be the fractal to closure from the key level. I don't. Do I? I can't really remember. I think some of my streams, like I go over like phase of price. I do go over in April 5th stream. I do cover like what key levels should form the high and low day, and then yeah, I talk about invalidation. So it's kind of like putting it all together. You would just, how to confirm that. You just put it all together really. But we can do a stream like that kind of. But is it usually just going to be the fractal C2? I mean, yeah, but they have to be from like relevant levels, That would confirm the reversal, yeah. But I pair it with like SMTs and drivers, especially SMT. That's what really confirms it, is like SMT, to be honest. And the C2 closure is just like how I get on side with it, really. Or C3, whatever. Are you on this chart at 6 a.m.? No. I'm not on the charts at 6 a.m. The relevant hours within the 6 a.m. candle, yeah, I refer to like 8 a.m. or around the drivers. Same thing for 10 a.m. candle. I'm not going to be trading 12 p.m. typically, 1300. I'm going to be trading 10 a.m. to 11 a.m. Those 2 hours, the first 2 hours of the 10 a.m. candle typically. So if you guys are new, literally I would just trade the 10 a.m. candle, the easiest to trade, and no sound. Am I good, guys? Oh, it's back. Okay. Yeah, if I was newer, I would just trade the 10 a.m. continuation typically, because you have so much to work with, bro. You have like the previous sessions to work with. You have all the New York AM drivers to work with, to look back on, and you don't have to do much guessing. It's usually continuation. And yeah, 6 a.m. reversal, 10 a.m. expansion. That's going to be your easiest strategy you will ever trade. As long as you have a drawn liquidity open, it's literally just continuation. It's pretty pretty easy. And all you have to do is trade 2 hours a day. It's like from 10 a.m. to around like 10 a.m. to 12 p.m. typically, around there. But you're going to get your entry before that. So if you guys are busy or something, you work or something, you only have limited time, 10 a.m. is your strategy, honestly. Pretty much. Those 6 hour reversal 10 a.m. are just starting to look the same every day. Yep, it's literally the best in my opinion. 6 a.m. I like 6 a.m. too though for continuation a lot of times. If like there's an established low day in New York, I love trading with the drivers. One of my favorite things to do within the 6 a.m. candle. Because like your trade is done in like less than an hour. It's just so quick because of the drivers. Can we do a backtest session? Or yeah, I have a 2 or 3 backtest sessions already. If you want to go watch those. What do I talk about? Framework, April 5th April 26th, I think. I do believe. You guys want a backtest stream? Takes the others too much. Yeah, guys, if you took a loss on Friday, like, it's fine. Don't get sad about losses. Or break evens. Don't matter, bro. Don't let them affect you. Like, they're just part of the game, bro. Hold the shit. Oh, yeah, I knew that, yeah. Yeah, honestly, it's a pretty good thing to do. Scaling in. So Tristo, the way I like risk manage, it's all dependent on the type of trade I'm taking. So let's say like it's absolutely A plus framework on the daily, profile is extremely good. I will not go break even super early because I have all this confirmation, framework wise supporting it. So it's like I don't want to take a break even and then it go to my into my way. I will gladly take a loss. I'd rather take a loss on a trade like that. Whereas maybe if I'm gonna trade a day that's a reversal day, like a very large wick or something, I will not treat it the same way as what I just mentioned. These type of days, I will go break even a lot quicker. I'll go break even the first invalidation above my entry, shit like that, right? Because the day doesn't call for a high probable day, so you have to adjust your risk. For an example, right? So as soon as we create this or some shit, I'll go break even as soon as we create this, and I'll typically my TPs will be more on the lower side, so like 2R minimum. So a lot of these reversal days, I'm just targeting like 2R or something. Yeah, just dependent on that really. Same thing with partials. Like on a day like this, I'm not going to be holding a runner really far. I'm going to take the majority off at 2R because it's never guaranteed that we're going to go to the daily open, for example. But on a day that has a lot of potential, very high probable, I'm not going to partial really early. I'm going to probably leave a runner to like the first external draw, you know what I'm saying? So that's how I kind of approach it. It's just dependent on the framework. I skipped your question. Oh, when you are trading the 10 a.m. candle versus an entry at 9:30? Oh, when am I doing it? When the 6 a.m. candle does not support expansion in my given direction, or there's just no framework in general. So like 9:30 can like manipulate or something, but if it doesn't support expansion, then you have to wait for 10 a.m. But if there is, let's say we're in continuation, so we have a low of day, high of day put in. This is when you're just going to trade 9:30 continuation. I can't trade the 6 a.m. candle as long as it supports expansion, and as long as we're trading away from some relevant level. First time listener, do you follow fractal model? Yes, I use the fractal model. I just use it within 4-hour candles, basically. Gotcha, yeah, if you scale in at 2R. Oh, yeah, all right. Which chart do you watch? Oh, definitely, I watch futures. Yeah, that's some bullshit, huh? It's always weird with these feeds, man. Some feeds will take out a high and the other one won't. It's kind of annoying. You skipped my question? Sorry, dude. Let's find it. Can you please go over two-stage SMT? Okay. Well, I have a whole stream on this, but essentially, think of it as an SMT confirmed by an SMT. Just think of it like that, like a large range SMT followed by a small range SMT, or maybe on the hourly time frame. You have like more close ranged highs and lows, for example. like something like this. So think of it like an SMT like this, confirmed by an SMT, right? And the reason why I require it like this, think of it like a roof almost, right? You have the asset that sweeps out, and then it's creating that second stage SMT, but it looks like a roof, right? Think of it like that. It has to look like this. And there's a reason why you want it to look like this, because it has to do with strength switching and asset synchronization, but I'm not going to go over that because we don't have enough time, but I would watch my stream or my YouTube video on that. It also can look like this. Now, if it looks like this, where it's a double sweep, one thing you absolutely need to have here is the asset that is creating the double sweep to confirm the larger time frame sweep. Is this here? It has to manipulate this high. 100% has to do this. Right? It has to manipulate this high. Like I'm talking like reversal signature here. If it doesn't do that, you can disregard it because oftentimes it's just going to look like this. You're going to have an SMT here and then an SMT. This has to just keep on expanding, which is not a reversal signature rate. So just think of it like that. It's an SMT. It's roof divergence, yeah. But you see it. There's also different types of SMT and stuff like that, but I don't teach all of that here. You don't need to know all of it either. But yeah. To see 6 a.m. candle as a reversal is when it either closes a C2 or closes back. Yeah, pretty much, yeah. But remember, I don't actually require candle closes. So like, as long as a 6 a.m. candle actually reaches into something relevant, it might not close a reversal candle. So what I mean by that is like, maybe the 6 a.m. open is here, and the relevant low is down here. If the open is way over here and it trades into something relevant, it's not going to have enough time typically to close all the way back up here to form that reversal candle. Or maybe the previous candle's low is like right here, and it can't close back within the previous candle's range. That's fine. That doesn't mean it's not going to reverse. As long as this previous candle actually hits something, and then this is when we have the continuation sequence where maybe within this 6 a.m. candle, maybe you have an hourly reversal candle, right? Maybe 10 a.m. is opening within that. And so if we already have a reversal put in with the 6 a.m. candle, not visibly shown by the higher time frame close, which is the 4-hour close, but on the lower time frame, this is when 10 a.m. can just expand, right? Because you have a lower time frame reversal. So that's why I don't require a closure, typically. Yeah, this is recorded. The Cractal model. So the way I do it, yeah, like you can view it like that. So like this 4-hour, 1 hour, yeah. So like it can be like this. So like I said, with 1 hour highs, it can look like this, right? And this SMT in the hourly chart is your confirmation. So what I mean by that, if I go over here, where was it this week? Where was it? Oh, I'm on the 4-hour. Sorry. It was right here. So you might have it on the hourly, like this, right? Or you might have it on the higher time frame. So let's go on an example on the higher time frame. And it does not matter what time frame you look at it on, to be honest. Let me go to the daily. Sorry if you guys hear a fucking vacuum. Where is it? I just remember this one example. No, I forgot it. Damn. Oh yeah, it's this day. I don't know why. I just remember this here. So if you look here on YM, you have this divergence. If I go to lower time frame, it can be with previous candles lows. Like it doesn't matter. Because this previous candle's low is just a low on a lower time frame. You see how it creates this divergence here? If I go on ES, this is your higher time frame, and then your lower time divergence. See, it's like a roof. It's inverted. So it looks like that. So it doesn't matter if I go to like the 3 minute or whatever, like you're gonna see it typically, right? Or whatever, right? It's just right there. Or just your previous candle's lows. You know, it doesn't really matter what you view it on, to be honest. You just have to have that string switch. So if I go to NQ on Friday, here's your first crack in correlation. And if I go to YM, look at this high on, look at 930 high. It does not get taken out, but on YM, it does. So it looks like this. Does that kind of make sense? Yeah, I'm probably gonna dip too pretty soon here. But yeah, if I go to like the 5 minute or whatever, it's just it's this little 3 minute high here. Doesn't matter. When you have the first SMT between NQ and ES and the second SMT. Yeah, that's still two-stage SMT. Because I view correlation between triads on all assets that I trade. So if I was gonna trade Forex, it's between these three. We're gonna trade indices, it's really between these three. So NQ, ES, YM. Now when they're out of sync, when YM is out of sync, I will use RTY, for example. That's when I'll use RTY. Or if I want to trade RTY by itself, I'll just look at YM for correlation. What else? Oh yeah, gold. These are the triad that I use. And oil triad is very good. So if I had to rank the triads for like futures, I would say indices triad is the best, oil is the second best, and gold is the third best. You're gonna see that gold and silver and etc. are kind of like decoupled sometimes. It can be kind of hard to navigate if you're newer and stuff. But indices and oil are, I think they're really good. Like very, very correlated. Yeah, guys, probably gonna bounce here. Pretty sure we're over an hour, but yeah, guys, I will catch y'all later. If you guys have any questions, just post them in the chats. I'll get to them. But you guys have a good day or a good weekend, and yeah.